Hello everybody, my name is Christian Charlo. Welcome to this Market Chronicle. Today we're Friday, October 17, 2014. Today folks, I want to talk to you about how to trade the rebound on the markets. Because since the beginning of the week, what we had a massive sell-off on the market. A lot of panic happened in the markets today. So far in MarketGurus.tv, what we've done is that we actually have taken some profit on a lot of our short positions at the beginning of the week. But since the last 2 days though, what we had markets that started the rebound. So now the big question is, can we believe or should we beware of this rebound? So this is what I'm going to do in this chronicle. I'm going to show you how should you trade this rebound on the market. What are the targets if ever this rebound continues on the market? So let's take a look at the S&P 500. This is the chart here that we have. First of all, if we take a look here, since the market started the rebound yesterday, the rebound has continued. Right now, what we have done, this is here the Fibonacci retracement. So from that top to that low that we reach here, so we actually have reached the 38.2% Fibonacci retracement around this area, which also corresponds to the 200-day moving average, which is in green. So that's a point where there's a first pause in the market. And this is why intraday wise, we're seeing that there's a wave of sellers that's coming into the market, because you see the markets are unable, the S&P 500 is unable to maintain its upward momentum. However, if we have a continuity of this rebound, what will be the next target? Well, the next target will be 195. And 195, why? Because there's a lot of congestions there. There's a 100-day moving average that's there, the 30-day moving average, and also it corresponds to the 61.8% Fibonacci retracement. So that's the target if ever markets pursue their rebound. There's some risk though that they might not pursue it, because if ever next week there's, I don't know, something concerning Russia, something concerning Ebola that comes out, investors might panic and we might actually have a sell-off in the market. But will this sell-off bring the markets lower, even lower than the low that they reached on October 15? So far we actually doubt it, but those of you who want to trade that rebound, I think the best strategy, instead of buying stocks, stock picking stocks, I think you should favor ETF. And one ETF, for instance, that you could favor on the Dow, I think it's SPXU for the ETF on the upside. What's the ETF on the upside? It's for the Dow, yeah, there's HSU on the TSX that you could trade for the Dow. Yeah, UPRO or UPRO. So those are two ETF that you have. So on those ETF, for instance, UPRO, so if you're getting in a UPRO, instead of getting out if ever the ETF goes lower than 92, because that would be too much of a loss potential, get out only and only if the ETF goes lower than the support of April and May. So if it goes below $96, $98, get out on UPRO. On HSU, which is an ETF that does the same thing, but that's on the TSX, if ever you have HSU that goes below 25.50, you have to get out on that position, simply because we want to avoid to actually be caught in holding on to those bullish ETF, having a false rebound, and having markets going lower than the low on October 15. So it's all about minimizing those losses and getting out if ever we go lower than the support of May and June on the S&P 500. So as I said, yes, you could trade that rebound. If it does continue, it's with ETFs that's your better place to actually trade that rebound. On MarketGurus.tv today, even if there's a rebound in the markets, we're actually feeling not comfortable to recommend stocks on the long side, simply because we think that this rebound is still difficult to trade, and we think that ETF are the best and safest alternative. For the TSX, is the same scenario too as well. If we put the Fibonacci retracement, we saw that the TSX has actually tested the 38.2% Fibonacci retracement, which also corresponds to the 10-day moving average, and we actually had a loss of an upward momentum. So if the rebound continues on the TSX, what are the few targets? First target could be around 14,636 points, and the next target will be around 14,890 points. So on the TSX, the ETF that you could trade is HXU, but instead of waiting for HXU to go below 24 bucks, you should get out only and only if HXU goes below the support of March and April. So if it goes below 25 bucks, 24.80, get out of that positions on HXU. It's all about minimizing your loss potential with those bullish ETF if today's rebound turns out to be a false rebound next week. Next week it's gonna be heavy in terms of earnings. The earnings season has just started last week or this week. And we think that if ever there's an event that comes out that brings fears into the market again, well, this rebound might totally be a false rebound and markets might deflate. And it's important right now to actually make sure that you put your stop loss on those bullish ETF. So this is the list here. On the S&P 500, you have those two ETF, UPRO or HSU. And on the TSX, you have HXU, where you could actually trade it. On UPRO, your exit point is at 96 bucks. On HSU, your exit point is around 24.80, 25. And on each XU to trade the TSX rebound is around 24.70, 25 bucks on HXU. So that's it, folks. I wish you a good weekend. See you next week for your market report.